Hello people, welcome to IS Forex. This is where we guide traders on foundations to freedom. You can see on my screen someone is asking, please, but I would like you to do a video on the difference between price channel and price pattern. Alright, so yeah, I used to mention them in this channel a lot. Price pattern, price channel, price pattern, price channel. So someone is asking me to do this video explaining the difference between the both of them. Okay, so thank you very much, Michael, for this. Thank you for being part of the family. So for those of you who are wanting to join our free Discord community, please go in the link in the description and you get to join us in the free Discord. Send your questions there, send your chat setup, your trade ideas, whatever you're looking at, send it in the Discord, the free Discord channel. And for those of you who always contact me on WhatsApp, please, we are no longer on WhatsApp. Our WhatsApp is going to be taken down. So if you want to reach out to me or you want to reach out to us in the community, please make sure you are in the free Discord channel. The link is in the description. And those of you who are wanting to join our premium community, use the same link as well. You get to see where to join our mentorship. Alright, so without wasting much of our time, thanks to all of you who have subscribed to our channel. We are running 1,400 subscribers right now. I'm really excited. Thank to you all. And for those of you who are yet to subscribe, please don't forget to subscribe and turn on the notification bell as well. If you like our content, don't forget to give us a thumbs up. And if you have a request, say it in the comment section as well. Alright, so let's get started. So people, for this explanation, or for me to clearly show you guys the difference between those two terms or those two concepts on the chart or on the market, I'm going to be using a synthetic index chart and also Euro USD, which is the forex chart. All right, so that whichever side you are trading, you won't get confused when you reach your own level or your own side. All right, now talking about price, let's talk about price pattern first. Price pattern is the easy one or the quick one or the common one that we all know. When someone say we have a bullish flag, or sorry, this is a bearish flag, continuation, right? Or we have, let's say, a running channel, which is kind of a bearish stuff too, but it is a reversal. Let's say it is a reversal, the reversal version of this one. This one is a continuation version because our pattern is like this, right? And then this one is a running channel. Please don't mind my drawing, okay? I was not good in fine arts in school. I ran away from school for trading. So we had this one, impulse from the upside, we have this correction, and then we have this impulse. This is a reversal pattern. We call it running channel, right? When the correction is, or the swing created on the correction is in the same direction with the impulse. This one, you can see that the swing created on the correction is like in an opposing direction with the impulse. The impulse is coming down, but the swing is going sideways. So it's a continuation pattern. And then also for the bullish ends, we have this guy pushed to the upside. We have the continuation flag like this, and the other ends, the running channel for the bearish one is, how does it go? Push to the upside, we have a running to the upside like this, right? Then we fall. So all of these things are price patterns. Okay, I'm trying to calculate in my head how to properly write or describe this thing in English. But if you notice this price pattern, let's say price pattern is a combination of the three phases of the market: the impulsive phase, the corrective phase, and the continuation phase. All right, the three phases: impulse, correction, and the further impulse. These are price patterns. Whenever you have price patterns, they're just like an impulse, you have a correction, and then an impulse. An impulse, you have a correction, and an impulse. An impulse, correction, impulse. So price patterns are the three phases of the market. The three phases of price pattern. The three phases of price chart. All right. Let's just put it in the simple term. The three phases of price actions are price patterns. They only consist of one impulse, one correction, and then a continuation or a reversal impulse. All right. So price pattern consists of the three phases of the market, which consists of the one impulse, the originating impulse, the correction, which is aligning it to become a pattern, and then the further continuation, which is the final impulse. This is a price pattern. Even if you are having, let's say, expanding kind of pattern, like let's say we have an impulse like this, right? And then we have this guy, then we have this one, and we have this one to the upside, breaking the highs and breaking the lows. We call this expanding, whatever we call it, right? So we have our trend line to be like this, and then this one will be running down like this, so it is expanding. So no matter what, since it's only a combination of this impulse and then this correction before we have another further impulse to the downside. Let's say the impulse will go like this, we have this impulse to the downside. This is a price pattern because it's consisting of only an impulse, an originating impulse, a phase 2, which is the correction, and then the final impulse. This is a price pattern. All right, this is a price pattern. This is the simplest way or the easiest way I can define a price pattern to you guys. Price pattern is the combination of the three phases of the market: an originating impulse, a corresponding correction, and then an impulse and a resulting impulse after the correction. All right, let's go again. Price pattern is the combination of the three phases of the market: an originating impulse, a correction after the impulse, and then an impulse after the correction, like I just illustrated. So when you have the flag or whatever structure, we have the impulse, you have the correction, then you have another impulse. These are price patterns. Even if you have them in the inverted way, like this, like that, price pattern. Even if you have it in an expanding structure, since it's only consisting of one impulse from the originating side, then we have the correction and then the other impulse. That is what we call price pattern. So let's look on the chart for the both ends. We look at the 75 1s, which is synthetic index. Then we look at Euro USD to mark out price patterns. Then after that, I'll come to define the price channel for you guys, and then you look to mark that out as well. Now look at this place. If I say what pattern is this, it's already played out, so it's clear enough for you. It's very easy to understand. So this is an impulse to the upside, and then we have this correction, then we have this continuation. This is a bullish flag or a bullish whatever we can call. So we connect our this thing like this. So this is a price pattern. Why? Because it consists of an originating impulse like this one, and then a correction, this one, and then the final impulse. So this is a price pattern. That is what is called a price pattern. So mostly when it is, how is it useful for trading? It's useful, or it is used in the trading industry when it is giving us a third touch, or let's say it's giving us a touch on our trend line. All right, those people who only trade a trend line, like I said, if you trade a trend line alone, you are not really going to be, well. You need to understand the price swings as well. So if you trade the trend line, for pattern traders mainly, they wait for the third touch for execution. So each time, since we're having impulse correction like this, so each time the market comes to this level, we know that we impulse from the downside, so we should be looking for buys. All right, this is how we use it for trading. So this is a price pattern. Just 1, 2, and 3 is a price pattern. If we look to the other side too, we can get the bearish version of that. This is an impulse to the downside, right? And then we get this like this. This is a price pattern. 1, 2, 3, like that. And then after that, we had this little impulse. That is the continuation side of it. This one. So 1, 2, 3. The combination of these people is called the price pattern. All right, it's called price pattern. So this is a bullish one. This is a bearish one. So let's try to look for another type. If you don't really understand what I'm doing, or if you have any question, please don't forget to say in the comment section. All right, but I think I've been able to break this down to as easy as I can. So like for the expanding structure I illustrated when I was drawing the lines, this is one. We have an impulse from the upside, then you see we are creating this high, came back a little bit down, right? Broke the high, broke the low, broke this low, and then went back inside again. So this is an expanding structure. So if I'm to draw the line or the trend line or the connecting line, I'm going to draw it like this. This is an expanding structure, right? You can see the line is opening. So this is an expanding structure, but it is a price pattern, not a price channel. Why? Because of the fact that it consists of only an impulse, originating impulse, and then we have this correction, and then why, and what next? We have the final impulse to the downside. So this is price pattern. Price pattern consists of an originating impulse, a corresponding correction, and then an impulse after the correction, either to the opposing side or to the corresponding side. Either it becomes a reversal pattern or it becomes a continuation pattern. That one depends on the correction. All right, so let's see if we can get another one. Now this is a reversal scenario. So we had this impulse, right? And then we are having this correction. People that know this, pattern traders, you should know, like I think symmetric triangle or something. This is it. So ascending from this side, and then this side is what kind of descending. So it is a reversal pattern. Ascending here, descending here, symmetric triangle. They are all going to meet up to create what angle? To create an angle. If they keep drawing them, they can meet up to create an angle. So since you can create an angle, if the both of them meet, it is called a symmetric triangle. They are all heading towards each other, facing each other. So it's a symmetric triangle. So for a symmetric triangle, you have what? There's an impulse to the upside, right? And then it created us a symmetric triangle formation, which is the corrective phase, and then we have another impulsive phase. So this is why it is called a price pattern, because it has what? An impulse, a corrective phase, and then a further impulse. That is the literal definition I can get for that. Uh, uh, what is price pattern? All right, and you know that what the name says, whatever we call it in English, doesn't matter. You just have to understand the psychology behind these things. This is what we need in the market, okay? Because you will not sit in the market every day to tell yourself what they are, unless you are trying to teach someone before you know, trouble yourself a lot to know their names and stuff like that. So another thing we have, let's see another one here. You can have this. This is an impulsive correction. Those of you that know, you know. I always mention that. So this is an impulsive correction, right? It's an impulse, and then we have this expanding one like this, and then we have this to the downside. So this and this correction becomes a pattern, and because of it's a pattern, we know that we should anticipate the drop from here, and we drop. So 1, 2, 3 price pattern, because we have an impulse, and we have a correction, and then another impulsive phase. That is why they are called price patterns. The three phases of the market, impulse, correction, and impulse, is what is called in one word as price pattern. Just have that in your mind. Okay, that is what we call price pattern. So let's look at Euro USD to see if we can spot ourselves price patterns as well. So this is a price pattern on Euro USD, very quick one. We have an impulse from this level, and then we have this correction like this. So this is the price pattern, impulse, correction, and then a continuation. So we have originating impulse, and then we have a correction after the impulse. Then we have the third phase, which is an impulse after the correction. So impulse, correction, impulse, that is a price pattern. All right, and then let's look at another example. Right now the price is kind of funny here, but it's also making sense if I go to a time frame a little higher than this. So this is you can see this is a symmetric triangle as well. This is heading a little bit slight, and this one is chasing it. So this is an impulse, this is a correction. So this is a price pattern because we are having what? An impulse and a corresponding correction. So we know the market should come like this and give us an impulse. So this is a price pattern. All right, those of you that know patterns very well, you can figure out what the name is. You call that, but I don't know, it's kind of noisy. All right, so when you have an impulse, a correction, when you have an impulse and a correction, it is already a price pattern because it tells you to anticipate another impulse after the correction. That is what is called price pattern. All right, the three phases of the market that you know called the impulse, correction, and impulsive phase. That is what is creating the price pattern. The impulse, correction, and impulse, it is what is put into that one word called price pattern. Now let's look at price channel. All right, now we are back to the synthetic index market. All right, this is where I want to draw my illustration. So I said impulse, correction, and impulse is what we call the price pattern. All right, now sometimes if you go to a higher time frame, all of your impulse, correction, and impulse on another time frame is just one impulsive leg. You understand? So what I'm teaching to you now, don't come and ask me later that what time frame do you think I can spot a pattern. Every time frame you can spot a pattern in every time frame. You can also spot a channel in every time frame. All right, you just have to train yourself and train your mind to understand what I'm about to tell you. Now, we said from the beginning that we have this guy impulsive and then a correction, right? And another impulse. This is what is called price pattern because it's what the first phase of the market: impulsive phase, corrective phase, and continuation phase. Now, after that, we have another impulse to downside, and then we have another one again, another impulse again, right? We have another impulse, like the last impulse that came down. This impulse, sorry, I've messed up my drawing. Like I said, I'm not good at fine art. So we have impulse right to the downside, and then we have this one to, like, correction, and then we dropped again. Then what did price do? Now this is like we have dropped. So let's say price is trying to be in a downtrend, and then we keep giving us corrections, and then we find another way to drop again, and let's say price gave us another wave of correction and dropped again. Now, the combination of series of price pattern is called a price channel. Try to remember this. The combination of series of price pattern is called a price channel. Now, this is no more a pattern, but single they are price patterns. This is a bearish. This is a bearish. Let me use this. This is the bearish, whatever it's called, bearish another one, and then another bearish thing, right? Single, they are all price patterns, right? This is a price pattern, price pattern, price pattern. But the combination of all of this, the trend line that can, oh boy, my drawing is crazy, man. The trend line that can tear down to all of this to connect these swings, it is now this whole trend line I've done like this one is now a price pattern. A price channel. Price channel is the combination of series of price patterns that have been created consecutively with each other. A series of price patterns that have been created consecutively. It is a price channel. All right, but price pattern is the series, the three phases of the market: impulse, correction, and impulse. That is price pattern. Why price channel is a series of price patterns created consecutively after each other. So when they say the market is in an uptrend, that means the market is creating a price channel and a ascending price channel. That's where you get the ascending channel and descending channel, because is either market is ascending, going up, or coming down. So that's when you get the ascending channel and descending channel. Now this is where we had the illustration of the bullish whatever we had here. We had this guy. I'm sure you can remember, right? We have this impulse, correction, and impulse. So this is a price pattern, right? Now look at this guy too. This is another price pattern, because we have this impulse here, or this correction, and then we have this impulse to the downside. And also, if you look at this guy, it's another price pattern, a reversal one. We have this impulse and then impulse to the downside. Now, if I look at all of these patterns that have been given, and then there's a way to connect them, which clearly you can see, we have a bigger impulse from here before we started creating all of these little guys. So connecting this guy like this, 1, 2, and 3, is giving me a bearish price channel. So the combination of this impulse, this pattern, you see this pattern, 1, 2, and then impulse, another one, impulse, 1, and then down. There's another pattern here, reversal pattern. We have another one there. Another pattern is here. A reversal pattern is here. Another one there. So the combination of all of these patterns is what gives us the channel. The combination of price patterns gives us a price channel. Why price pattern is the illustration of the three phases of the market: the impulsive phase, the corrective phase, and the further impulse, or the impulsive phase, corrective phase, and the other impulse. The three phases of the market. Market is only trending or correcting. So it's either it is trending down or giving us the corrective phase and then trending again. So that those ones are the price pattern. But the price channel are the combination of all of these price patterns. All right, so please don't forget it. Let's look at Euro USD to see. Now we have now look at Euro USD. If you look at Euro USD very well, like the way I zoomed out, if I ask you what is going on right now, we are in an uptrend because we are creating this high and this high. Sorry, this low, higher low, higher low, higher lows, right? And this highs and this highs. So if you look at all of this, if I am to break all of this chart into pieces, you can see that it is the combination of price patterns that are creating this particular thing. But if I'm to put a trend line to it right now, I'm supposed to come and let's say connect the trend line like this, 1, 2, right? And then a trend line like this, 1, 2. Based on the time frame I am on right now, this is not a pattern. This is a price channel. Why? Because it is the combination of different price patterns on this time frame that created it. This is a price pattern on this time frame. This is a price pattern here. Impulse, correction, impulse. This is a price pattern on this time frame. All right, this is a price pattern. If you look very well, there's another one here. So this impulse corrected a little, drops. This is a price pattern as well. So the combination of these price patterns, the series of all of these price patterns in a particular direction, is what is giving us the price channel. The price channel is this 1 and 2, external 1.5. So there's those of you that are familiar with Falcon, okay, what is referred to as the outer structure, or it's called the outer structure in I think that's what my call it. So if I have all of this is the outer structure, and then you guys know, like, if we were trading this, we still have this trend within a trend. All right. So the outer structures are what we refer to as the price channels. Then the trend within them are the price patterns. All right. So price patterns are literally like the trend within the outer structure, because we have this impulse, we have this correction, then we have a reversal impulse. So this is impulse, correction, and impulse. Phase one, phase two, and phase three. So this, I think I have been able to break down the difference between price pattern and price channel to some extent, or to the lowest extent I think I can go. So if you think you have a question, or if there's a confusion in your ends, or you don't really understand what I just illustrated, please say us your comment in the comment section. All right. And for those of you who are wanting to learn proper trading, please look in the description and come to us for proper mentorship. Thanks for watching.